Hey traders, welcome back to Trade Empire. In this video, we will explain the following topics in details. First, we will explain that what is inverse or inversion fair value gap, exclusive inverse or inversion fair value gap trading plan, fair value gap models, psychology behind fair value gaps, and many live chart examples to make you understood everything easily. So let's start our video after a short intro and disclaimer. Welcome back traders. We all know that fair value gaps provide important key insights into markets' future movements, and we can also use it to develop effective trading strategies. This makes fair value gap an essential concept to understand. Now let's start with the basics of fair value gap. A fair value gap forms on the chart when we have an efficient price movement. This thing usually happens when price moves quickly in one direction. And this inefficient price movement leaves liquidity voids behind. And we expect that price will come back to fill the gap and to grab the liquidity. Fair value gaps are typically formed within a 3-candle sequence, and we can easily notice them on any chart. If you notice any 3-candle sequence on the chart, where the wick of first and last candle do not completely overlap the body of the middle candle, it means you have a fair value gap on the chart. Fair value gap on the chart forms when the market is in a hurry to reach a particular price point, or when smart money enters the market and inject a large amount of money. When bullish fair value gap forms on the chart, the gap between the candles that do not overlap indicates the lack of sellers as much as buyers. In simple language, there were not enough sell orders or positions to fill the executed buy orders in that specific price level, resulting in unfilled buy orders in that area. On the other hand, when a bearish fair value gap forms on the chart, it indicates that there were not enough buy orders to fill the executed sell orders at that specific time period, resulting in unfilled sell orders in that area. These unfilled orders are the main reason for the price to return and fill the remaining orders, and then move into its original direction. What is the psychology behind the fair value gap? To answer this question, consider a 3-candlestick sequence as shown in example. And it created a significant imbalance in the market in higher time frame. And to analyze this 3-candlestick sequence from the market structure perspective, we will move into a lower time frame. And there we will see that price created a bullish structure, similar to this example I made on the screen. And as I told earlier, the market consistently shows a leaning to fill and rebalance the gap. Let me teach you in more detail. Here you can see that the price created a bullish structure to the upside with great momentum. It is done due to the heavy buying pressure and lack of sellers. And when traders notice this type of sharp movement in the market and miss out a great buy opportunity, they often place their buy limit order below the key zones, like demand areas or order blocks, and they expect that the price will make a deep retracement and fill their orders, and then it will continue moving upward. This scenario accumulates a lot of pending buy orders in this area, creating a significant liquidity, waiting to be swept by the price inside the fair value gap zone. Fair value gaps are categorized into models, BC and SIBI. BC mean buy-side imbalance, sell-side inefficiency, and SIBI means sell-side imbalance, buy-side inefficiency. Let's discuss the BC first. In this market scenario, price offers only buy-side delivery in one direction. The algorithm pushes price far too quickly to offer any sell-side delivery, and to find more liquidity to absorb enough supply to rebalance the recently generated demand. And this often leads to a fair value gap known as BC. And the algorithm will try to rebalance the inefficiency by offering sell-side delivery. As here it forms this bearish candle to offer fair value to sellers to enter the market. Moving to the next type of fair value gap, which is sell-side imbalance and buy-side inefficiency. It is just opposite to the BC. In this scenario, the price moves sharply downwards without much buy orders and creates imbalance. The algorithm then tries to rebalance the inefficiency by offering buy-side delivery. as here it forms this bullish candle to offer fair value to buyers to enter the market. We have 3 key levels inside the fair value gap: premium, discount, and consequent encroachment. Each one of these levels offers a strong support or resistance level in the lower time frame. But the consequent encroachment is the most important level for us. It is the 50% level of a fair value gap. And if the price respected this level, there's a high chance that it will reverse from this gap area, as shown in example. Let me show you another example. Here we have a SIBI fair value gap. And we can see that price did not respect our consequent encroachment level and break through it. So now we can expect the price to move higher instead of getting reversed. And look what happened. Now let's move to our next topic: inverse or inversion fair value gap. So what is an inverse fair value gap? We can also call it inversion fair value gap, but both are same, just have multiple names. A fair value gap that has been disrespected is called inverse fair value gap. It means that the price break through it instead of getting reversed. And this breakout causes the fair value gap to switch its characteristics and became an area of support and resistance. Depends on the direction of the breakout. Look at the first example. Here we have a BC fair value gap. And price disrespect it and break through it. Now the bullish BC fair value gap switches its characteristics and became an inverse fair value gap, which is more likely to hold and react as a resistance area. Now look at the second example. We have a SIBI fair value gap, but price did not respect it and break through it. So now we will call it an inverse fair value gap, and it is more likely to hold and react as a support area. Remember, every time price breaks through a supply or demand area without respecting it, that area turns its characteristics from supply to demand, and demand to supply, mean if a supply area has been disrespected, it will act as a demand in future, and if a demand has been disrespected, it will become a supply area in future. Here on the Euro-Dollar 1-hour chart, we have a BC fair value gap, and we are expecting that the price will return to it and will reverse. But instead of getting reverse, it disrespect this area and break through it, making this gap an inverse fair value gap. This gap zone was a support before price break it, but now it will act as a resistance, and price can reverse from it. And look, price did what we expect. But remember one thing, you should only execute on fair value gaps if you have a rejection candle into the fair value gap area. If you have a solid candle without wick rejection, I will recommend you to not trade on that fair value gap, or just zoom into the lower time frame to look for any confirmation. So guys, that's all for today. I hope this video has provided you some knowledge. If it does, please leave a like and subscribe the channel for more trading videos. Wish you good luck for your trading journey.